Okay, I'm about to make this video as quick as possible. I just picked the stock that everybody know, this Apple. Let's try Amazon. I'm gonna do Amazon real fast. Amazon go one way, pretty much. That's up. So, but we still gonna do it. Anyway, first thing you want to do, this the app, but even if you're doing it on your phone, this trading view. You go to indicators. You want to add the moving average, like I told you. Um, I like the exponential moving average. So, boom, it'll add, and then you'll see it right there, boom. See the moving average looking like, that. And then you want to add something called the RSI. This is going to be your baby right here, when it come down to you knowing when to get out. Between the RSI and the moving average, it's going to be everything. I like my RSI to be set to, depends on what I'm looking at. But if you're looking at an hourly chart, which I advise you to look at, trade stocks, hourly, nonetheless, set it at 5. I like the 5 right now, 5 RSI. So once you set it to 5, what that means is it's showing you the highs and the lows from the candles, the last 5 candles from wherever it's at. So that's what that means. But you don't got to know all that shit. That don't really matter. So what we're looking at right now, you're going to be day trading. So pretty much, in this case, stocks look a little different than the Forex charts look. But in this case, each number, like that 7 on the bottom, it's in the way now. But that 7 on the bottom right there and that 8 on the bottom right there, those represent the days. Like that was the 7th and the 8th of the month, 9th, 10th, those are the days. So let's just go back to an old day, like July 2nd. In this case, I wouldn't day trade Amazon, but if you did, it only go one way. You know what I'm saying? So it's really not a good example. Let me go something else that move different, like gold. I'm trying to go to something that I can really show you something that'll, you know, show you how you got to be in the markets. But yeah, gold move different. So in this case, right here, when you see the RSI way up here, but when you see it way, trying to get this crosshair, when you see this way up here, that pretty much mean that it's in that overbought zone, But as long as it's above the moving average, it's a buy. Period. That's just the way it works. Moving average is pretty much like a trend line, is what they call it. And anytime see where price start falling below the moving average right here, it's a sell. And you see the dojis, you know, see the dojis on the bottom. You was talking about the dojis. You see them at the bottom, and you see it separated from the moving average, like I was telling you before over in the voice note. So in that case, where it's making something called wicks, you see those long lines, those lines on the bottom of the candles. That's indicators that the sellers are getting weak. So you would enter in, and you can also see on the bottom with the RSI, it's in the overbought zone. So that's a big indicator that you might want to buy. And then, boom, you buy. Now, that would be 12 o'clock on, it don't matter what day it is, but it'll be at 12 o'clock, whatever day it is. And then you see it's just going up, up, and it's starting to get weak. You see the candles getting small right here. You see on the bottom what RSI is. I'm just making it seem simple, just to say it in the simplest way. You see what the RSI is, where it's at, it's an obvious get out. Like this where you would sell. Your RSI is telling you that it's in overbought territory, it might keep on going, but you, in this case, you would have made all the money that you needed to make, and you go there and you see where it did go down because it was in that overbought zone in the RSI, and then it dropped, and now it's touching that moving average, but it's not breaking the moving average. So that'll be another instance. That'll be the next day at 3 a.m. or whatever. You probably wouldn't be trading that early in the morning, but that's 6 a.m. But whatever. If you bought in that time, then boom, 12 o'clock hit. You see, you made a couple of dollars. You can hold it if you want to, but boom. It's just, I would use, basically, to answer your question in the simplest way, I would use the RSI, which is that on the bottom. Of course, you would first look at where you are in the moving average. If price above or below the moving average. And if it's above the moving average, it's price getting tired with those dojis that you was talking about. Because if it's above it, but you're starting to see smaller candles in these dojis like this right here, you might want to wait. In Robinhood, you only buying. See, I buy and sell with Forex. But, boom. And it committed something. It made something called a double top, which that's something else. But, and then that's a clear sell. Boom. So you would have got out already if you would have, seen the wicks. You see the spike on the bottom. It's a spike down on the RSI. It's staying above that moving average right here. What we looking at. That's a clear buy. That's a clear buy. Because it's respecting the moving average. That's why I tell you put the moving average on your chart. Then boom. And you'll get out because you'll see those same candles that the dojis. You'll see those same dojis. And you'll be like, okay, you might get out early or whatever, but you'll still be in profit. When it come down to trading, it's you never can lose winning. I never seen a winner be a loser. So if you get out of a trade early, in this case, if you would have caught that part right there and then just got out early right there because your RSI was showing you that it's about time to get out, and it shot up way more, which it ain't way more, but it shot up more. You can't be mad because you won at the same time, and it's getting tired, so you wouldn't just keep buying that shit. You'll buy again down here, and then boom, catch that little part, get out. And once it falls below that moving average, then it's a downtrend. When it's below the moving average, it's a downtrend. When it's above the moving average or coming from above the moving average to test it like it did right where we was looking at, it was above it. And then, yeah, that right there. It was above it, and then it tested it, and it ain't move. It's moving sideways. That's an indicator that it's going to keep going up. When it come down to trading, like you said, it is risk, but as long as you using proper risk management, the rule is always trade with 5% to 10% of your account. So if you trading with $200 or you got $200 in your account, then you don't want to risk losing anything more than $10, or something like that. That's proper risk management. I don't always follow that, but that's just proper risk management off the rip. That's just basically how you get out. Basically, the overview. You use a RSI. So you see that on the bottom. I can't point really like that. I got my little pointer here. The RSI on the bottom. And then make sure your moving averages are right there. You use TradingView to look at the charts. You use Robinhood to basically enter your trades. Robinhood is really not good for looking at price. And it's not good for, scoping out entries and exits. You use TradingView to get on your exits and shit.